Hello, one Paul here. Today I'm going to be talking about why I think MicroStrategy is the best option trading stock that you can do for yourself. There's all these other stocks you can focus on, but MicroStrategy actually it pretty much moves with Bitcoin, so it's my top pick for actually options. But the disadvantage to this is MicroStrategy is it's pretty expensive, and to be more successful with MicroStrategy, you have to focus on in-the-money contracts. Today, I kind of want to go over what would happen if you did an out-of-the-money contract with MicroStrategy compared to in-the-money contracts, and basically how, if you focus on out-of-the-money contracts, which is something that I've been doing. What happened, it was last year, which I focused on many different formulas, and I did out-of-the-money contracts, and I ended last year in the red, because I was focused more on out of the money, and then I couldn't understand the difference between in the money and out of the money. And because I didn't understand the difference, I was in the red. It wasn't because the formulas that I was doing was wrong. It was just because I was doing out of the money. I basically took a bet on a price, and it didn't move enough, so I was always in the negative. With MicroStrategy, it's about the same thing. So for the best result, I would recommend doing in-the-money contracts, but the in-the-money contracts are pretty expensive. So today I kind of want to look at the scenario. If someone wanted to do, you could still do out of the money contracts, but you have to find a price move of, I think, about $10 to $20. You have to get at least a $20 move to be successful if you want to do out of the money contracts. If you do in the money, you'll be in profit a lot faster. So I want to kind of show you the differences if you did an out of the money to a in-the-money contract with MicroStrategy. Okay, so first we want to look at, now I'll show you my setup. This is how I trade my stocks, and this is kind of how I see things. But first, give you the quick rundown. I'm going to give you the quick rundown of how I set everything up, and then we're going to look at the difference between out-of-the-money and in-the-money contracts with MicroStrategy. So the setup is real simple. I use my 3 smooth moving averages, and I put it in 5, 8, and 20. And the 20 is meant for seeing where the overall direction is going. So if the 20 is above, so you go here. If the 20, which is the red line, if the 20 is above, that usually signals a downtrend. If the red line is below and the other 2 EMAs are above it, that usually means an uptrend. So I use this to see the overall direction and to see if there's any moments of it changing directions. Now, you'll see right here whenever it collides with each other, that's another good time to get in. I know I've made videos about this, so I'm not going to talk much about it. But I also have the impulse MACD right here. I have videos on this, on how to set it up or how I set it up. I basically use the impulse to see if there's any consolidation zones, and I use my RSI. So that's basically my setup. Back to MicroStrategy, what I would actually do is I would look at my RSI, and I'm on the hour here, so what I want to focus on here is, let's just focus on a couple moves here. So right here we see the RSI crossing. So this would have been a move that I would have got in. So I would have come in right here, and I would have rode this out till up here. This is, well, let's just say this is a day right here. So we could see right here that this move right here is a move for one day, and it's a $22 difference in price. Now, keep that number in your head, because a $22 difference in price with options. Now, if you did out of the money versus in the money. So We're going to first look at what you would get if you did a out-of-the-money contract. So if you did an out-of-the-money contract, and the prices are cheaper, but let's just look at a couple. You see how this is way over here? When you're doing in-the-money contracts, and I teach this, you got to get as close to this dot as possible to be in profit. You're starting over here. Now remember, we did a $22 difference in price. So the price, let's just do this math here. So that's $383. $383. Take away 22. So the price has to go to $361. The price would have to go to $361 or more, or what was that a put? $361 or less to be profitable here. So that was $361. So let's just see if we are in profit. $361. Believe it or not, we are in profit. $361. We are still in profit. But let's see, hold $361. Yeah, you're still in profit with this move. But usually that's not the case. Let's look at a couple other scenarios here. And, if out of money, because your contract will have to move. Your movement, your option trade would have to go at least $10 to $20 to be in profit. And, you don't know if that's going to happen. Sometimes the moves can be small. But let's look at a couple other scenarios here. Okay, we see right here on the impulse MACD, you see it go underneath it. You see it on the RSI. So if we came in right here, we rode this out till, see, I just want to do a day. I just want to do a day. We did a day trade. So this is a $28 move. So this is a profit zone 2. So I want to see that if you did out of the money to me is still really risky because the move could not be that big, and if the move isn't a big move, you'll end up losing money, which is why I don't do out of the money. But let's just look at a couple scenarios here. Let's say you did this move right here. Let's see. If you did this one right here, if you came in, you see the RSI crossing. So if you came in right here and you did this move right here, you rode this out. Let's do a day. Okay, here's a good example. This, if you did one day, this is a $11 move in the price. Now, if you did out of the money in this example, if you did out of the money, that basically would go 383, take away 383, take away 11. That's 372. So the price would have to go to 372. Okay, so right here, you're down. You're in the negative. This is why I don't do out of the money contracts, because this is what made my account go into the red last year. You want to focus on doing in the money contracts, and we're going to look at now a scenario if you switched your mindset. Now it's going to cost more money, and it does cost a little more money for because you're basically bypassing. And what I want to actually do is we want to focus on getting to this dot. Our contract we're going to buy, we have to get as close to this dot as possible to be in profit. But that's going to be very expensive if you're doing an in-the-money contract, because you'll basically be in profit right away. Or if you're right on the movement in the chart, you'll be in profit right away. So let's just look at another scenario. Let's just say you did in the money contract instead of out of money, which is what I highly recommend doing. So let's just do this move right here. We see that the moving average is a signaling an uptrend. We see that the RSI is crossing right here. Now, I personally would only focus on doing one way to make the price cheaper. One way to make the MicroStrategy price cheaper is I only focus on doing the contracts for 1 day. So really look for the signal, look for the RSI to cross, but I only do 1 day contracts because that's the cheapest that you can go when you're doing with MicroStrategy with options trading, is by doing in the money contracts for 1 day, or but you buy the sooner expiring contract. So if I focus right here, and we came in right here, and I wrote this out. Let's see if this is a day. This is a day right here. So this would have been a real big move. This is a $54 difference in price. So let's see what happens. And I want to do this maybe twice here. Let's just say we focused, and what we got to do is we got to get, now this is going to be more expensive to get that move, but we have to focus on getting in the money contract, and we have to get this to as close to this dot as possible. So let's just go here. We're up to, this is $3,780. This is about $4,000 right here. Okay, still, I would need more to get the best profit here. Let's go to $5 grand here. Okay, a little bit more. Let's do another 1,000, or 63. See, I told you this is not a cheap. The contracts are not cheap. But anyway, I would go right here. So what was the price? It was a $54 difference in price in 1 day. So the price, let's just add this up. We're doing a put. So 383 take away 53. 383 take away 53. We got 330. So if it goes to 330, it doesn't even register. It doesn't even register. That is a big move. So let's just I'll do this manually, try to figure out how much this actually is. But this is about, you make about $100 for every dollar. So this is a $5,305. This is a $5,305 move. So that's massive. But if you did out of the money, you would still be in profit if you did this move with out of the money. You just wouldn't be making as much money. So that's why it's important for me to do in the money contracts. Let's just look for another scenario. We'll do this one more time. Let's just do this small move right here. See with the RSI crossing, we see the moving averages are signaling that it's an uptrend. So if we came in here and we wrote it out, let's see, this is only going to be, well, we're not going to do it for 2 days. No, that looks like the end of the market. Let's do another one here. That was the end of the day. I don't do my trades. I don't enter my options near the end of the market. I always try to go, maybe if I see it happening like an hour after the market opens, but never when the market is opening, and never at the end of it, because you do not, especially with MicroStrategy, you do not want to be caught in a trade to where it has to carry on to the next day, because if that happens, it could go the opposite way. But anyway, let's just say we got in right here, and we wrote this out. Let's do a day. This is a small one. This is a $14 difference in price. So if we did, well, $14 difference in price that's a $1,420 move. Now, if you did the in the money contract, which let's just go back down here. Go back down. Let's say you want a cheaper. Let's say you got this one. So you did a $14, okay? So this was 383 take away 14. 383 take away 14. So it's 369. So it goes to 369. So let's see, where 69, right here. So you basically just break even and you're not in profit. So this is why I don't do out of the money contracts. It's the lesson that I had to learn the hard way when it comes to doing options. I would recommend, and I know it's, more expensive, but I would focus on whatever stock that you're doing. I would focus on in the money contracts, and I would focus on bringing this to as close to this dot as possible. It's going to be more money, but there are some stocks that are a little bit cheaper, like McDonald's, Walmart, a whole bunch of other ones. You can find other stocks that are a lot cheaper. You don't necessarily, MicroStrategy is kind of like the end game, but there are a lot of cheaper stocks to where you can get to this point and still you won't make as much money, but you'll make a little bit, and that's good. So now I want to kind of go over what you can do, and because MicroStrategy is expensive. And until then, you could either do two different scenarios. You can either, like I was saying, you could trade. Let's just do. Right now I have a Walmart one. I have a Walmart option that's carrying through for today. Okay, so let's say Walmart, for example, and you would do the same thing. You would do the same thing. Basically, you would look at your RSI and find your moves. And if you rode this out for, I try to keep it at a day, $3 moves. So you're not going to find $20 moves here, $40 moves. You'll get $1 to maybe $3 price moves. So that will result into maybe $100 to $300 profit by doing the smaller stocks. If you go to 100, you'll go to like 100 to 300, and you might find some good trades, and that's good money for like a side hustle kind of things. But the real money will be with MicroStrategy. But what I want to show you is once you have enough for MicroStrategy. Let's go back to MicroStrategy. This is another way to make some profit. Until you have enough to do the option trading for it. But basically, if you focus on MicroStrategy on just day trading it, focus on all the moments where it's going up. You can't do this when it's going down. You can only focus on when it's going up. So like this moment right here, you could come in, you could buy some MicroStrategy, and you can write it out for, the advantage here is you can ride this out for a lot longer, but because it's not an options contract. But if you rode this out right here, this is a 7%, and a 7% off of whatever your balance is, you'll make your gains. And you can sell it and then just keep doing it over and over again until you make. The only disadvantage to doing it this way when you're day trading it is when you sell, you have to wait 2 to 3 days if you're doing a cash account. But anyway, that's kind of how I look. This is how I ended last year in the red. Took a break, and then I really looked at the formulas and charts, and then I looked at the best stocks to trade. And this is how you can become profitable with MicroStrategy. With doing options trade with MicroStrategy, and if it's out of your budget right now, you can day trade it, or you can do smaller stocks and build your way there until you can't afford in the money contracts with MicroStrategy. But this is for entertainment purposes, not financial advice. I'm not responsible for any profit or loss. But anyway, if you guys like this video, make sure you hit the like button, hit the subscribe button. I'll see you guys in future videos.